Bitcoin has its own unique industry-specific things like ETF approval or not, that can substantially move the price or perceptions of how it would move the price. And so it's got its own, it's kind of marching to its own beat. I am bullish with like a 3-year view. I don't really have a view for the
Okay.
next 6 months because that's going to come down to, there's various human decisions like is Yellen going to issue more coupon, bonds, and is that going to suck liquidity out of the banking system, for example, and put some pressure on all risk assets in the next 6 months, possibly.
During a recent interview, Lyn Alden and Mike McGlone gathered to discuss the potential market soft landing despite the rate hike. Lyn Alden shared her optimistic view on Bitcoin for the next 3 years. Mike McGlone pointed out that the recent bullishness in Bitcoin observed a month ago raised a red flag for him. Last week, Federal Reserve also stated that they no longer anticipate a recession in the U.S. U.S. Federal Reserve Chair Jerome Powell said the central bank staff no longer forecasts a U.S. recession, and we do have a shot for inflation to return to target without high levels of job losses. Vanguard's top economist, Joe Davis, said Americans will start losing their jobs soon, and that will probably stop the Federal Reserve from achieving its dreamed no-recession scenario. Mike McGlone highlights that the Federal Reserve's actions have been more impactful than their words. They have implemented remarkably aggressive tightening measures, the most significant ever witnessed, starting from a point of zero interest rates. The central bank has raised interest rates from near zero to over 5% since March 2022. The European Central Bank has announced it wants to monitor the liquidity of banks in the Eurozone more frequently to reduce the future risk of a financial crisis. Despite the heat and humidity and the resumption of Federal Reserve rate hikes, the bull market kept running in July. At this point in the cycle, it's entirely possible that the stock market could notch a new all-time high in the month of August. Now, let's shift our focus to the video. Before we continue, don't forget to subscribe to the channel and hit the bell icon to receive more updates.
Central banks rarely forecast recessions. The fact that they did earlier was kind of unusual, because central banks often don't want to be like self-fulfilling prophecy. Also, kind of putting a recession there is kind of a political statement in a way. And so they often don't really forecast a recession, kind of like how we look at the Congressional Budget Office and their forecasts, they also never assume a recession. They look out 10 years and they just give this like smoothed, outlook. And so I don't think we should really go by Fed analysis of recessions because you're inherently dealing with a semi-political organization. So I think we have to keep an eye on indicators, and those are mixed. I mean, I think some of them are pointing towards recession. Most real figures have decelerated. When you look at like the Conference Board leading indicator, that's very weak. And I think the key thing that's kind of holding it up is the fact that we're still running very large deficits for this part in the cycle. We're basically running the types of recession, like deficits you'd normally see in the deep part of recession before we're even in one. And it's not as impactful of a stimulus as, say, stimulus checks or child care tax credits, but it is leaking out into the economy in various ways, and that's kind of propping up at least the service sector and some other areas as well.
Have to point it's actually the opposite. It's what they say versus what they do. You just look at the New York Fed probability of recession from the yield curve. It's the highest since 1982. So I mean, and like Lynn said, yes, they're political. You can't expect Treasury Secretary Yellen to say, yeah, we're going to have a big recession. But what's and I knew Dave would laugh, because this is one of those things you have to say, yeah, thank you, ignore what you say, watch what you do. The Fed has tightened the most ever from zero. And then, so what's the most significant crypto? Bitcoin. Yes, the bullishness we saw a month ago was really my red flag that this is a serious problem. And that is that everybody's calling for victory way too early, despite the fact the number one basis of all markets is liquidity, and the Fed is still taking that away. Not just the Fed, the ECB, the Bank of England, and China's scrambling to catch up. So I look at this as good luck. And hopefully the stock market will keep lifting all tides, lifting all boats. But the bottom line is, anybody who's getting, you got to be careful long risk assets when you can get minimal 1 year, 5.25% in US T-bill. The average return in the stock market over time is 8 to 9%.
In the meantime, Bitcoin was changing hands at the price of $29,486, which represents a 2.20% gain in the last 24 hours and an increase of 1.09% across the previous 7 days, although it is recording a loss of 3.78% on its monthly chart. In June, Mike McGlone noted that Bitcoin was facing its first recession and a potential equity bear market in the U.S., as it trails the recent NASDAQ index gains and was under the effect of federal funds futures that were showing little potential for additional liquidity fuel, and that the approval of a spot ETF would not shield it from the consequences. ETF analysts at Bloomberg Intelligence raised their estimates for the approval and launch of at least one spot Bitcoin ETF in the U.S. this year. According to Lyn Alden, Bitcoin's future will consist of multiple cycles, with certain catalysts like ETF approvals having the potential to accelerate or impede its trajectory.
US regs have been a problem, but not for Bitcoin. That's why I'm focusing more on Bitcoin. Everything from the US regulations is that we might get this ETF and Bitcoin's away from the fray. That's the point I'm making, is Bitcoin needs to outperform risk assets on a risk adjusted basis. If it's not, it's telling us something has changed and something is wrong. And what's changed in Bitcoin? Volatility is the lowest ever. Why? It's in the mainstream now, cash and carry. That's the point thing we pointed out years ago. The minute you can trade futures in BitTo and are about that, hedge funds are all over that. When you can get free 10% return, risk adjusted, and you can hedge in futures, it's done. So to me, Bitcoin is a new world now. It's into the mainstream. We're going to get those ETFs, but it's going to trade more like equities, and it's not going to have anywhere near the performance we've had in the past.
When you look at equities and Bitcoin, what they have in common is that they're both heavily tied to liquidity in the market. That's a correlate variable. But then there's other variables that are obviously different for them. So obviously equities care about things like earnings. Bitcoin doesn't have earnings to worry about. There's so many kind of like individual factors that can influence in that time period. So I don't really try to guess that, but I think most of the on-chain indicators point towards bullishness over the next couple of years. Kind of the amount of that is being held, like the hodling behavior that you see, the dollar cost averaging compared to issuance. Most of these things are bullish. Obviously, certain catalysts like an ETF approval, a spot ETF could pull that forward. Delays in those types of things can push it back. But I remain bullish on the asset, and I still think that it's not going to be the type of illiquid spikes you saw earlier in Bitcoin's price action. But I do think that it's still a long way off its kind of total addressable market, and I think there's a range of total addressable markets that it could eventually reach. And I think it's still just not anywhere in that ballpark yet. So I think it has a number of cycles to go through. It's mainstream enough that everybody knows about it, but it's not mainstream enough that everybody understands it. I think that's kind of a segment that we're still kind of crossing. And I think there'll be more cycles ahead where more and more people will understand it, especially when we look out globally, when you see all these currencies kind of running into issues around the world, and they can say, well, I have a couple options. I have gold, I have stable coins, I have Bitcoin, I have illiquid local real estate, in some cases, whatever their decision might be. And this is like a new option that's available to them that really only in the past few years has made itself known on a broad scale.
Many economists and investors have been anticipating a recession, but because the economy has been so resilient, a lot of their timelines for when that recession will occur have been pushed later into the year and into 2024. The next couple of months will determine whether or not the Fed can engineer a so-called soft landing for the U.S. economy. That's the term market participants use to describe the possibility the U.S. economy can avoid a recession despite all the rate hikes. Our discussion comes to an end for today. We invite you to share your thoughts in the comments section. If you found this content informative, show your appreciation by giving it a big thumbs up and subscribing to our channel for the latest news and videos. Thank you for being with us.